What happens when cash stays off the books but IRS comes knocking? Two Indian motel owners in United States have now learned the lesson the hard way. Hi, this is Navibal and you're watching TimesXP. In New Jersey's Absecon city, Durvesh Patel and Mayank Ray, one of them Gujaratis, have pleaded guilty. Why? For defrauding the US interval revenue system. The two ran motel in Atlantic City, including a roadway inn and Econo Lodge. According to the US prosecutors, they deliberately filed a fake tax return to hide large amounts of the cash income. Well, here's what we know about this case. Customers who paid in the cash were often not entered into the official records. Taxes were collected, but not into the final bill was issued. That money never reached the government. Instead, the cash was used to pay the employee salaries under the table and for the personal expenses. The numbers are serious. Durvesh Patel admitted to invading nearly $250,000 in the taxes, while Mayank Ray admitted to invading about $129,000 USD. Both have pleaded guilty to one count each of the tax fraud and now face up to 5 years in prison and fines up to $250,000 USD. Their sentencing is scheduled for 11th of May 2026. Because both men have no major criminal history, the court could still sentence them to the probation instead of jail, but only if they repay the full amount of the tax they invaded. And this case points out at a wider issue. US investigators say that some motels and convenience stores and or their owners hide in the taxes and often pay off their employees. But experts say a very different story. Well, this is a digital payment increase. The message from this is very, very clear. In the United States, the cash deals don't stay hidden forever. So, now comes the question, do you think strict punishment is needed to stop the tax fraud,